This video is going to go through the logistics of the fishing simulation that we're going to start on September 17th, and that we're going to spend a lot of time on that Zoom class on the 17th, and then a little bit of time each of the next 9 or so classes, right? So here's the timeline, right, of the simulation. So this Thursday, I'm going to ask you some questions, right, some poll questions to see if you have gone through this video. And then I'll ask for your questions to see if there's any confusion about any of the logistics of the simulation, because we are going to start and do the first season, right, of fishing today, not today, but Thursday the 17th. And then each Zoom class thereafter for the next 9 weeks, 9 weeks including today, we will have another fishing season. So a total of 9 seasons of fishing. So today it'll be Thursday, it'll be a lot of time this week, and then each of the following classes, my anticipation is just a small piece, maybe 15 minutes of each class after that. And then on Thursday the 19th, we'll basically do a debrief on how the simulation went, and also go through the course material that relates to fishing, fisheries, and renewable resources. So chapters 4 and 18. And then 10 days thereafter, on Sunday the 29th of November, the written assignment that isn't yet available to you, associated with this fishing simulation and the material from chapter 4 will be given. So here is, I already introduced in the last Zoom class, who is going to be on each team or in each company, since you are a company that is going to be doing some fishing. So 5 team members per company, and we'll be breaking up into those in break sessions each week. So what is the simulation? So again, 5 companies, 9 years, no new information there. But basically each season, your major decisions that you're going to be making is, do you want to expand your fleet? Right? So do you want to order new ships? And not every year, but many of the years, I will have an auction for some number of ships that your company can bid on. So do you want to expand your fleet? And then the most important decision that you're going to have each year is, where are you going to send your ships? And there's going to be 2 fishing options: the deep sea or a coastal area, or leaving your ships in the harbor. So criteria for success for each company is, how much assets do you have at the end of the simulation, at the end of the 9 seasons? And your assets are composed of the amount of money you have in the bank, plus the value of your ships, which is going to be, for how many ships you have at the end of the simulation, each ship is worth $250. So $250 times however many ships, plus your bank balance, that gives you your total assets at the end of the simulation. Now, although your grade, right, for the course, for the assignment that will come after the simulation, is not based upon how profitable, right, how well your company does in the simulation. However, to keep it a little more interesting and to give you more incentive to put some effort into this, there is a grade incentive for making money, for doing well in the simulation. And how that grade incentives work is that for your company, every dollar that you have in assets at the end of the simulation, as a team, for your team, you can earn up to, and I'll explain what that means, up to 5/10,000th of a point, which sounds kind of goofy, but to kind of make it a little more tangible, for every $1,000 in assets that your company has at the end of the simulation, that's half a point. And this is on your final course grade, right? So not on this assignment, but on your final course grade. So it is a fairly hefty incentive to do well. So just to give you a little kind of frame of reference, most years there are companies that make have positive assets at the end of the simulation, and the most assets that any company have had in the years that I've done this was like $15,000. So that could be 7.5 points maximum possible on your final course grade. That's almost a freaking letter grade. So this should give a lot of incentive to do well. Now that's kind of the high, but clearly there's been many years where companies have made 10,000, so 5 points, so that's half a letter grade. Right? Now, when I say can earn up to, you don't automatically, if your company does well, right, get all of the points that your company has earned. You have to be there to win. Right, so you have to be in the Zoom classes. So there's Zoom classes related to the simulation, and you have to be there for most of the class. Right? So it can't just be show up for a minute and leave. So because I have that information when I download the attendance from Zoom of how long people were in the class. So 10 classes related to the simulation and the topic discussion thereafter. You can miss one and still get all of the possible points that your company earned. Based on your assets at the end of the game, at the end of the simulation. But you have to be there for at least 9 out of 10 to get 100% of the bonus. If you're there for 8 out of 10, well, you lose 10% of whatever that bonus was. So if it was, to keep it simple, 10 points, which would be highly unusual, but if it was 10 points and you were there for 8 classes out of the 10, you would get 9 of those points, and so on and so on. However, if you attend 2 or less days of those 10, you don't get any bonus points. Right? So, now, please note, there is no, for assignments, for other things, there are obviously reasons people miss classes. Well, this is a must be present to win, right? This is bonus. This is not something that is you're losing points out of your, off an assignment or something. So don't ask for excused absences towards the bonus. That's not gonna happen, right? So basically, the amount of bonus that you potentially get based on your company has to do well, has to have the more positive assets, the better, and you have to be in the class based on these criteria in the classes. And kind of a last note I'll mention from a couple of experiences over the years. There might be the case where your company realizes in the latter part of the simulation that you're you're going to have negative assets at the end of the simulation. That might be the case. If that is the case, you need to keep trying your best anyway, because if it is very clear to me, and I'm not going to explain the scenarios, but it'll be very clear if companies have basically just given up and are making stupid choices, if they were trying, that are so stupid that would just make no sense, you'll lose participation credit for that, because it hurts the integrity of the simulation for everybody, because the results for everyone are interrelated to a degree. So your fishing fleet, everyone's going to start out with 5 ships at the beginning of the simulation. You can increase the size of your fleet in 2 different ways. First, by winning the bid in the auction, right? So definitely in the first year, let's say in the first year I'll be auctioning 2 ships. You're going to basically bid, your company can choose if they want to bid on those ships, and if you win the bid, you basically pay for the ships, and you have them available to you to fish in the first year. So if you win, you would have 7 ships available as opposed to everyone else's 5 to fish in the first year. You can also order new ships to be constructed, and the number of ships you can order is based upon basically the size of your existing fleet. And the rule is you can order up to half of the size of your existing fleet rounded up each year at maximum. Right? So, for example, everyone other than the company winning the bid for the auction is going to have 5 ships in the first year. 50% of that is 2.5. Round that up, so you can order up to 3 ships. The one winning the bid, the auction, they'll have 7 ships. Divide that or multiply that by 50%, it's 3.5. So they could order up to 4 ships. Now, unlike the auction ships, the ships for that you order for construction are not available to you in the current year. They're available the following year. So anything you order in the first year isn't available till year 2 for you to fish with. Now, if we were in the physical classroom, I actually have a goofy little board, physical game board that looks like this. Not really critical to having that to make the simulation work, so we can do that without it, but this is what it kind of, in your mind's eye, you can think of it as, all right, are you going to put your ships in the deep sea to go fishing? Are you going to put it in the coastal area to go fishing? Or are you going to choose to leave them docked in the harbor where you don't catch any fish? And there's the shipyard, right? So as will be described as I go, if you order new ships, they cost you $300 per ship to order new ones. So this is all about cash flows. So there's things that happen in the simulation where you're bringing in money, like selling fish is the main way you bring in money, and the main ways that you have cash outflows, like that you're using money. Every time you go fishing, either sending to the deep or the coast, it's going to have operating costs, right, attached to that fishing, which will be described or quantified in a second. If you buy ships in the auction, you win the bid, you pay for those. If you order new ships, you pay for those. Now this interest earned inflow and interest charged outflow, each year only one of those two things is going to happen. Right? If your minimum bank balance at any point in the season, in the year, is positive, you're going to earn interest, 10% interest on whatever that minimum, right? And I'll show that, these cash flows happen at various points in the year. The minimum bank balance, if it's positive, you earn interest 10%. However, if your minimum bank balance at any point in the year is negative, which is true for many companies like this, right? They have to pay in advance for their operating costs before they catch the fish, right? So they borrow money from the bank. And you have a very flexible bank, right? You have infinite borrowing ability from the bank. But if you borrow to the point, right, where your bank balance, the minimum, goes negative, well, you're going to get charged 15% interest on whatever that minimum bank balance is. Now you're going to see at some point I'm going to have things bubbled out or basically highlighted off. If we were doing this in the classroom, an additional thing you could do with your fellow classmates would be to try to trade or basically buy or sell ships with other companies. In this Zoom world, logistically, I've decided that just makes no sense. It would take too much time or too difficult logistically to even try. So that trading piece is off. So that's why I'm going to have things crossed out. So your cash inflows again, selling fish. Every fish you catch, right, pretty good sized fish. You get $20 per fish. And as a reminder, if your minimum balance at any point in the year is is positive, this is a cash inflow, is positive, you earn 10% interest on that. Your cash outflows, biggest cash outflows are the top two, well, the top three actually, potentially if you win the auction. So the top one, operating costs. So if you send if you send ships to the coastal area, well, it costs you $150 per ship each year to send ships out to the coast, $250 to send ships out to the deep. And if you decide that you're best off leaving a ship or some ships in the harbor, each ship you leave in the harbor is $50, right? But you can't catch any fish there. All of these costs are charged to you at the beginning of the year, and that's why, especially in the early years, most companies' bank balances will go negative, right? You will be borrowing from the bank for most companies initially, early on. The other way that you have cash outflows is you order new ships, $300 for each ship ordered. Now that's not charged to you in the beginning of the year, not till the end of the year, but the ships, as mentioned a minute ago, are also not available to you in the current year. They're available to you the following year. If you have the highest bid in the auction, so you'll pay for that and you'll get the ships, and again, those are available in the current year. And if your minimum bank balance goes below zero at any point in the year, you're charged 15%. So here's an example of some of the operating revenues, right? Catching fish, money coming in, and expenses, operating costs, money going out for a year. And this is actually exactly what happened to each of the 5 companies in what I'm calling year 0, right? Leading into the simulation, right? You didn't all just come into existence as companies this year as we start fishing, right? You were all fishing last year already, and this is what everyone did, right? You each had 5 ships. You put 4 in the deep, you put 1 in the coast, and you put none in the harbor. So, as we'll talk about, it was an average fishing year, right? And the average number of fish that you can anticipate catching under an average year, with when fish populations are good, is 25 fish per ship in the deep. And you had 4 of those ships times $20 a fish, so that's revenues, right? Money coming in, selling fish for $2,000. Operating costs of $250 for each of the 4 boats, so $1,000. So you had a net inflow operating profit, you can call it, right, from sending the ships to the deep of $1,000. 1 ship to the coast, 15 fish is what you can anticipate in that average type year to catch in the coast. $20 a fish, $300. Operating cost $150, so you got $150 for that net profit, right? Operating profit for that 1 ship in the coast, and you didn't put any in the harbor, so there was no cost there. If you had put a ship, for example, in the harbor, well, the operating cost would be $50, so it would be a negative $50 net cash flow for the harbor, because again, you don't catch any fish in the harbor. So you add up the nets for each, and so for this year, basically you made a net profit, operating profit before interest, either earned or paid, before paying for ordering ships, right, for just doing the fishing, of $1,150. So each year is going to work kind of like this. Oops. What's going on here? This image cannot be displayed. Why the hell not? I'm going to have to stop. So sorry for that little pause. I had to close my file and open it up again because for some reason it wasn't showing this page. But anyway, so here are an example of throughout a season what might happen to your bank balance. Right? So you start out with some level of positive bank balance. Let's say you win the bid in the auction, so you have to pay for the ships that you just bought, right, that you won the auction for. So your bank balance goes down. Biggest reason that everybody's bank balance goes down early in the year, each year, is the operating costs for sending ships to the deep coast and for leaving them in the harbor even. And it might go negative, right? So here's a bank balance that has gone negative, and since it has gone negative, you're going to be paying interest, as opposed to if the minimum had been a positive, you'd be earning interest on that minimum bank balance. Then the biggest cash inflow is catching fish. So your bank balance goes up. You pay a little bit of interest because your bank balance was negative. Again, remember, your bank is, you're a good credit risk, right? You have an infinite line of credit with the bank, so you can borrow as much money as possible to go, as possible. Bad word. Bad choice of terms. You borrow as much money as you want to meet your goals, your strategies, to both send ships out fishing and to construct ships and to bid on auctions, etc. But anyway, so you pay interest because it was negative, and then if you constructed some ships, you pay for them at the end of the year, so the cost of any ships constructed that'll be available next year lowers your bank balance again. And I guess if you look at this whole year, bank balance started out here, and you look over here, and it looks like made a little bit of increase in bank balance, even though you bought some new ships. Right? So that's an example of how your bank balance might change throughout the year. So mention that there's 2 fishing areas, right? The deep and the coast. right? So the deep, give you a little bit of information about that fish, that fishery, as it would be called. Maximum number of fish at any point in the deep would be 3,000 fish, 1,500 for the coast. Already talked about the operating costs, right? It's more expensive to send out ships to the deep, but it's also, you have higher expected catch than you do in the coast. When ship effectiveness and other circumstances are good, right? Because the normal ship effectiveness, normal productivity, how much you expect to get for each fishing in the deep, 25 fish, coast 15 per ship. So your catch varies each year, both obviously based on how many ships you send out, but also based on something called ship effectiveness and how conducive is the weather to fishing. So recent history, right? There's a total of 25 ships total right now. So 5 ships for each of your 5 companies that are fishing in these fisheries. That number has been increasing over the last several years, leading up to our simulation, and the catch has been growing similarly, although these ebbs and flows are basically weather, right? Because each year the weather could be up to 10% better than a normal year for fishing, and up to 10% worse than a normal year for fishing. So the ship effectiveness, as just mentioned, right? So the expected number of fish you can hope to catch in a normal weather year is 25 in the deep, 15 in the coast. Assuming there is a decent level of fish density, the amount of fish per area, right, in each area. And if the fish density goes down below a certain point, the number of fish that you can anticipate catching per ship would similarly decrease for that. Now, like any other renewable type resource, let's call the fish a resource, right? Like renewable in this sense because there can be births of new fish, offsetting natural deaths of fish and catch, right? And basically this shows, at a general level, how much regeneration or net increases in fish population might occur based on births, right? If the fish are at maximum level, right, so 3,000 fish for the deep, for example, you can't really grow beyond that because that's the maximum level, so there wouldn't be any net births in that situation. Now here's probably the most important sheet to make sure that you understand, because this is the one that you're going to be getting each season. And every single company, although this says company 1, every single company's decision and results sheet is going to look exactly the same as this one in year 1, because again, everybody had the same results and number of ships leading up to the beginning of our simulation, leading up to year 1. So each company had 5 ships, right? There were no auctions in the last year, right? So each company had 5 ships available to send out. So the main decision, one of the main decisions you have to decide on is where to put your ships: deep, coast, harbor. So whatever the number, right, the ship allocation between the deep, coast, and harbor, it has to be equal to how many ships you have available for fishing, right? So 5 and 5. The other major decision that you need to make, and this will be, well, I guess 2 decisions. Do you want to bid on the auction? If you win, you put the number of ships there, and you'll have those added to the 5 if you win the 2 ships, for example, in the first year's auction. And you want to order new ships that would then be available to you to fish in year 2. So both pieces of that information. The financial results, right? Fishing results, financial results. This will be given to you by me in the basically after each year's fishing, not during the class. I'll basically collect all of your decisions in our Zoom class. I will put those decisions in the simulation, and the results will pop out, and I'll populate these decision result sheets, and I'll send them out to each team company member as information towards making the decisions for the following week. And bottom line again, right? The criteria down here at the end of the simulation to determine how your company did, to determine if you have potential bonus points, is how much assets do you have at the end of the year, which again is your bank balance plus $250 per ship salvage value. Right? So you could have zero bank balance, but if you have 20 ships at the end of the simulation, then you have a $5,000 in assets. In addition to sending this out to each individual company, which each company will only get their own information on how you did specifically in the current year, right, that's populated. I will also send out to everybody this summary of where everybody's at the end of each year. So at the end of the year 0 leading up to our simulation, everybody had 5 ships and $2,250 of assets, composed of $1,000 bank balance, right, as shown here, and 5 ships worth $250 each, so $1,250 worth of ships, so $2,250 total assets, and so this will give the results, right, each year for that. And you'll start seeing how you're performing relative to your competitor companies. So, besides this sheet, the other critical sheet to make sure you have a sense of as we get into this is the steps of play, right, of that we're going to do each time. So I'm recording this on a Monday, and I will be sending you out this video link, and in addition to these sheets today, and that'll happen either over the weekend or by Monday each week. Right, so I'm going to send out both the decision sheets where we're at currently and the financial summary for all 5 companies, and you'll be able to look at that and ideally even communicate with some of your company mates between then and Zoom class on Thursday of what your strategy might be going forward. Because there'll be a little bit of time to talk about that in the Zoom classes, but you're more likely to have a coordinated strategy that's successful if you actually start communicating with your company members outside of class. Okay, so once we get to class, and we'll be either doing this at the beginning or end of class, haven't really decided that yet. Today, probably the latter half of the class, and other classes we'll see. That makes sense. But anyway, whenever in the class we do the simulation, I'll tell you how many ships, if any, are being auctioned. Or actually, as I say this, this is the first time I'm doing this Zoom-wise, so I'm kind of creating this and modifying it on the fly here. So I'll probably actually even communicate that to you when I send you out the email saying, okay, here's your results. This is how many ships, if any. They won't always be auctioned, but how many ships, if any, are going to be auctioned. So now I'll tell you that in year 1 there will be 2 ships auctioned, and you either get them both or you get none, right? So whoever bids the most for the 2 ships gets them. Then everyone's gonna go to the meeting rooms, right, the breakout rooms, and decide on how much if anything, that you want to bid. Everyone then comes back. This is really important, so it kind of is coordinated and makes sense. Decide which of you, amongst your team members, is going to write me in the chat, which I only see, no one else sees, how much you want to bid. Right? So one team member, one company member, types the following into the chat in this format. So let's say company 1 wants to bid $400 for the 2 ships. So you type in not XXX, you type in company 1, 400 bid. And once I have bids from everybody, I will say who has won, and then I'll communicate who won the auction, and then I'll update what you have on your decision sheet of how many ships available, which for everybody in the first year will be 5 before auction. Whoever wins the auction pays for those ships based on how much they bid, and then they'll have 7 ships to send fishing. Then you'll go back to your meeting rooms, and you'll make 2 decisions, right, that are on the decision sheet, right? You will decide if you're ordering new ships and how many, which again will be available not for fishing this year, like the auctioned ships would be, but available in year 2, for example, the first year that we play, so the following year, and where you're going to put your ships in the current year, right? Coast, deep, harbor. So then, after some amount of time, and I'm still no idea how long we're going to be doing this, more time today than, or I keep saying today, more time this week, in the year week 1 than in future weeks, because presumably we'll get more efficient at doing this. But anyway, you'll come back to the classroom, and then again, one of the company members will type in the chat, company 1, how many ships you're ordering, if any. So please put 0 if you're not ordering any. And again, remember that it can't be more than your current fleet rounded up. So for everybody other than the company who won the auction, that's 5 divided by 2, rounded up to 3. So 3 maximum. So 0, 1, 2, or 3. How many of your existing fleet before orders you're sending to the deep, how many coast, how many harbor. Then I'm going to collect that information, and after class, likely over the weekend, I'll put that into the simulation. The results will pop out. I will populate your decision sheets. I will send those out, and we'll go back to step 1, and the following week we'll do it over again, Groundhog's Day style. Okay. Please, 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 I highly encourage everybody to really participate in this, because inevitably a large percentage of students in each year, when they give feedback about the class, say this was their favorite part of the class. But that's only going to be true if you guys are putting in the effort to make it so. Okay. So with that, we will go fishing.